I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. It's July 3rd, 2014. I'm Logan Burgess here. Joining me to my right is Cody Bills to help wrap up the week for the grain market. Obviously, we saw a lot of selling here across the grains. We saw some continuation today on a Thursday. As you can see, corn down 3 cents, new crop corn down 2 3/4. We had old crop beans leading the way lower, down 16 1/4. New crop down just 7. Chicago wheat, though, did have a little bit of strength today, up 4 on the September contract. December trading lower 5.5 cents. Early this morning, we did have a reportable sale out from the USDA, 176,000 metric tons going to Egypt for new crop corn. Didn't really seem to be supporting the corn market, though, a lot. We did as well get the full export sales report. Anything in that report to help prop this corn market up?
You know, not really. Nothing really all that positive here. We came in within analyst expectations for corn, within analyst expectations for soybeans. When we looked at wheat, though, we came out well above analyst expectations, booking 567,000 metric tons over that 450,000 metric tons, which was the high side of analyst guess. So that was very positive to see here for wheat, and I think one of the contributing reasons why we did see relative strength out of them. When we look at corn and we look at soybeans, according to our models, though we did come in within analyst expectations, the pace was not strong enough to maintain how far ahead we were. According to our models, corn's now 137 million bushels ahead of pace, slipping 7 million bushels just in the last week. So, you know, we were about 154 million bushels ahead of pace last week, now sliding down there. So we're not keeping up with the pace we need to maintain those that ahead of pace level that we had last week. The same situation came out for soybeans. We are 102 million bushels ahead of pace now. We slipped 6 million bushels from last week.
Well, as you said, kind of one spot that we did see some strength in terms of the grains was the wheat export sales here reported from the USDA. One other thing that could have been helping out wheat futures today, we did have Informa come out and revise their projection for 2014 wheat production down about 12 million bushels. So, I think that played into kind of the math here as well on a Thursday. As I said, we've seen a lot of weakness out of this grain market all week. Corn and soybeans seemed content to sell into the close. Wheat was a little bit different, did have some good fundamentals to back it up. As a result there, we saw September up 4 cents, as I said. Cody, we did want to talk a little bit today about the August soybean contract. As I said, it led grains lower here today, but right now there's some technical mile markers that people kind of need to keep on their horizon.
Absolutely. When we saw the reaction to Monday's report, we actually, for the August contract, traded right down to those 200-day moving average. Luckily, also around that level is that $13 whole price mark. So that was, I think, relatively supportive. But the following days, on Wednesday and on Thursday here, we traded right back down to those levels, ended up closing through that 200-day moving average and closing below 13. To me, this just shows some very, very weak front month soybeans. One thing that was positive here, as a result of beans coming off, we did see basis increase on average about 2 cents across the U.S. We did see premium facilities, end users, both on the river and at crush plants, we saw them increase their basis over 6 cents. So, about 6.5 cents for soy plants, about 6 cents along the river. That's very positive to see. But one thing to keep in mind is that we have been seeing a lot of beans moving up the river to the Ohio Valley area. And we've seen that for quite some time. So I think, what we're starting to see here is more stocks on hand for soybeans. Obviously, end users are nervous here with prices coming off. They need to bid up that basis to draw the grain out of farmers' bins, especially out of 47-cent decline here in the last 7 days on that August contract.
Yeah, absolutely. Not a lot of farmers real willing to sell old crop bushels into this market, considering what we got on Monday from the USDA. In my opinion, though, moving toward next Friday's USDA report, we are going to get an updated picture of the soybean stock situation. That's the first time we're going to see this new 84.8 million acres factored into the soybean balance sheet. And honestly, based on the trade action that we saw today and these longer term outlooks for the bean market, I don't think it's a bad situation to get in some downside protection, whether that be futures or a put strategy coming into that report on Friday. If you have questions about that, feel free to call our office. Number is 877-472-4607. Thanks a lot for joining us here on Thursday to wrap up the week. Everyone have a great 4th of July holiday. We'll see you back here on Monday.